Welcome to SBI's GTM Value Creation Corner podcast with SBI CEO Mike Hoffman hosting. In this episode, Mike is joined by Chris Cabrera, founder and board member of Exactly, as they discuss ideas from Chris's latest book, The Unicorn Fallacy. Their conversation explores common pitfalls in pursuing growth at all costs, as well as how to build profitability, sustainability, and longevity into a business.
Hey, Chris, welcome to the show.
Hey, Mike, great to be here.
Good to have you. So for our audience, everybody, we have Chris. We are honored to have Chris Cabrera, who is the founder of Exactly and author of a new book. Congratulations, The Unicorn Fallacy. I read it. I got all my bookmarks and everything, Chris. So congratulations on the book.
Here. Thank you for doing that.
How was your writing a book experience? How did it feel to have it under your belt?
Well, this is the second one, technically the third one, but it's the second, larger format book. And the first one was Game the Plan that I wrote years ago in the run up to our IPO. And this one was really fun to do. A lot of it was written during the post, COVID time when things were a little more not going back to the office and that kind of stuff. So I was able to really focus on it. But no, it was great, and I love the topic, so it's always fun to get these out.
Yeah, no, it was good, and it's timely. So again, congratulations. It was a great read. So I like the audience to get to know a little bit about our guests. So can you talk a little bit about your background?
Well, sure. So I grew up in the Silicon Valley. Started in technology sales like silicon graphics, more hardware type of things. Quickly moved into software sales in the 90s. And then in the late 90s, I joined a company called Calidus Software, which was doing this on-premise commission software. And so I spent 8 years doing that, built a public company, had a great run. And then in 2004, at the urging of Salesforce.com and the CFO there, I left there to create the cloud version of that company because they weren't willing to go cloud, and I won't bore you with that story. That's in the first book. You can read about it. But and so in March of 2005, we embarked on what was then one of the very first SaaS companies. There weren't a lot of us out there at that time, and here we are 20 years later, just about, and we taken the company public. We took it private under Vista about six and a half years ago. And I recently stepped aside as the day-to-day CEO and promoted my longtime COO, a guy named Arnav Mishra, who's doing a great job. And I'm still a very active board member, but it's time to sort of hand the reins over to the fresh young guy and see what he can do.
Right. Great. Well, it's been quite a journey, and congratulations also on building a great company. So I don't want this to be an excuse for people to not read the book. So we're gonna leave some things for people to be compelled to do that. But the book is really around ditching the growth or die herd and build a company that lasts. So what was the inspiration to go down that path, Chris?
Yeah, I mean I wanted something a tiny bit edgy, and growing up in the Silicon Valley. Years and years ago, there were the notion of unicorns. And I grew up in a world where a unicorn was a rare thing. It was a rare, animal, mystical animal that you'd never see one, right? If you did, it's like this incredible thing. And sure enough, the first unicorns were that, they were the Googles and Facebooks and these companies that were seriously rare, just crazy, blowout companies that did amazing things. And as a young entrepreneur, back in the early days, like you aspired to be a unicorn because it was, if you could get $1 billion valuation before you were public, it was, just incredible. Like, and it was such rarefied air, right? I think if you fast forward over these many years, it kind of got to be a joke. I mean, that's why I use this phraseology of talking about a herd of unicorns, because the imagery of a herd of unicorn is laughable. I mean, it's just a joke that you'd have a herd of unicorns. It's an oxymoron. So, but yet, that's kind of where we got to in the Valley. Was everybody and their dog was a unicorn, and I'd come across these companies and meet these great young entrepreneurs, and they'd be pounding their chest because they were a unicorn. And I'd be like, wow, that's fantastic. You have $1 billion valuation. What's your revenue? And the revenue would be $40 million. And it's like, wait, you have $1 billion valuation. You're doing $40 million. Largely because you've taken all this money, huge A-rounds, and you're spending it like drunk sailors to drive revenue so that you can get these outlandish, $1 billion plus valuations. Like, it just didn't compute to me as a guy who went to business school, got my, degree at, entrepreneurship, undergrad business, went back to school and got my master's in business, kind of learned how to build businesses to make money. And all anybody ever talked about was like, trying to become this unicorn of these crazy valuations. And, of course, it bothered me for a long time, but it really didn't show until we started getting into the downturn and all of a sudden these companies that had these high flying, valuations, when the growth finally slowed, all of a sudden it's like when the tide goes out, you see all the crap that's there, you realized that many of these companies were built on a house of cards, and now many of them find themselves in an existential threat because they basically have shares that are effectively worthless. You have people that have all this stock that it is based on a valuation that they'll never see for years and years and years, and so you have all these senior executives saying, "What am I doing?" Even though it's a good company. So anyway, that was really the genesis of why the book, and it's kind of fun to take that angle.
Yeah, and we were, going through that SBI on the other side of it. That bled its way from VC all the way into private equity as well, and we would go through engagements with clients where it was just about growth at any cost, and we'd look at them like, are you sure you want to do that? That might not be the wisest thing for the. Yes, it's all about driving top line growth. And then you have the conversations with some of these companies as there was the downturn late 22 into 23, when, literally someone would look at you on the screen and say, it was all about ARR growth before. And now my board is telling me, on EBITDA, and I've said this, I'm going to refer back to one of our other podcasts, is like, you've got a cohort of customers that you decided to go after that have a 3-year payback and a 1.9-year average life. We don't have a calculator that's ever going to make that work. And so we saw it from a different perspective, and a lot more of the engagements we have right now are down the path of what you call it intelligent revenue. I want to jump to page 12 because this is near and dear. Where you say a quality revenue operation is the engine that drives the rest of your business. However, most organizations don't give their revenue operation the attention it deserves. And then you go on to say, it is an evergreen move that makes sense in any economic climate for any company. So, and then you go into the whole concept of intelligent revenue. So a couple of things I want to index on. One, you use the word evergreen in that quote. So can you talk a little bit about how you see it as an evergreen thing, your revenue operation, and then get into a little bit of, a definition of intelligent revenue?
Yeah, I think the point I was trying to make there is that there's this pendulum that's constantly swinging, right? And so for many, many years, the pendulum was pegged toward growth at all costs. And I was a victim of that. I raised, millions and millions and tens of millions, hundreds of millions of dollars over the years, but exactly. And, for 17 or 16 and a half of the, almost 20 years, never made a penny. And if I never had made a penny, I would have gotten yelled at on my board. They would have been like, what the hell are you doing? Why are you making profit? Go drive that into more, sales generation to drive more profit. And I'd be like, in the early days, I was like, wait, what? You don't want me to actually make any money? This is crazy. And then I understood the rules of the game. And so, you adjust for that. The problem is then the pendulum swing, and just as you talked about, when the economy slowed, and the thing that I find hilarious is, so I've been espousing this ever since I started writing this book, long before it was published, and it was very popular because it was in the midst of all this downturn, and everyone was going, "Oh my God, this is genius!" Of course you got to think about the other side of growth and thinking about profitability and EBITDA and all those things. Yeah. And now I'm already starting to hear companies that are immediately saying, we got to get back to growth, growth, growth. And it's like, my point of the evergreen is stop chasing the pendulum, because that's not how you build a business that lasts, right? If you want to build a long-term sustainable business, and I know that this is hard because many of the CEOs that might be listening to me, they don't even get to make this, right? It's their board or their investors. And if those investors are chasing the pendulum, and the pendulum's going to swing back to growth at all costs as soon as the economy comes back around and we get through probably the next election and all that. And I think that's going to be a shame, because I think people are going to have short memories and they're going to forget about what we just went through. My hope with the book is that people read it, realize there's a happy medium. And if you could play to the middle of it and focus on a balance of growth and profitability, that will serve you forever.
Right.
And that's what I meant by evergreen.
Yeah, no, it's great. And I was asking about that for a couple of reasons. On the evergreen word, I was asking because we're actually at SBI, we look at companies and we talk about this long-term growth roadmap and growth program because it's dynamic. It is going to change, and it's going to go back and forth. And there are different things you're going to want to do at different times. And if you're privately held and you get to the end of a hold period, you're probably gonna do less investment. You're gonna probably want to index on profitability. So it's always this move back and forth. And yeah, the pendulum swing, that is something you gotta keep an eye on. And we're even seeing in our CEO surveys, it swung from, we have what's called the value creation compass, and in the top right is invest at all cost for growth. And in the bottom left is, hey, I think we could go from 27% growth to 17% growth and take $400 million of cost out and drive, some healthy EBITDA. And we saw a rapid movement from what is the northeast quadrant to the southwest quadrant, but we're starting to see a creep back up. And there are other ones to choose from. Like if you look at the northwest quadrant, that's no regrets. That is, how do we increase our rate of growth without increasing the cost that goes along with it? So, I think we're very aligned on the idea.
I think that's a really good point. And the thing I would say is, look, there are still real unicorns. There are still real unique companies where the growth at all costs mantra probably makes sense. Right. And the best thing an investor can do is strive for that. So I'm not suggesting that, you don't want to paint with too broad of a brush and put everybody in the same basket. But I am speaking to those of us CEOs that run companies in the middle. Right. We're not at either end of those of the quadrants that you're talking about, because those are unique companies and they should be doing something different and unique. But for the rest of us that are kind of in the mushy middle, balance will always serve you. And as a CEO, my hope of them reading this book, and I hope that they take away from this, is push back on your board if they're pushing you to one end of the spectrum, because a balance is going to serve you as a CEO better and your company better in the long.
That's great advice. And if as an audience you want to hear more about this and other perspectives, podcast number 4 with Pilar Shank from Cisco. It's actually entitled "Growth at Any Cost is Over." That's what we call the podcast. So, I want to go to chapter 7. Chapter 7, you talk about ditching the hero culture. Can you talk a little bit about what you mean by ditching the hero culture?
Well, I think to me, the idea of the hero culture is the rep who's riding on their white horse at the end of the quarter with their big order. And, it makes the quarter and everybody else has a party and, you as a CEO go to your board and tell how great you are because, you got this order. You can't build a company like that. Like you can't count on those things. And that's the problem, especially when that pendulum swings because the market has changed, like what we just experienced. That hero, if you're banking on the hero culture, you're going to be that whole. And my whole thinking about this is to make the management of your revenue, the way that you view, revenue either intelligently or not, is something that's more, sustainable by looking at every single deal and the metrics within every single deal. And it's just a little more of the blocking and tackling consistently rather than praying for the Hail Mary, the hero, the thing that's going to happen. Because again, I love when that happens, and that will happen, and hallelujah, that's fantastic. But have that be upside, right? Don't build your business around planning, because you can't.
It's like 11-year-olds on the football field at the schoolyard. Like they get in the huddle. What play are we going to call? You're going to run a post. We're going to do the Hail Mary. All right. So what does this, and when you look at ditching the hero culture, what does this, from your perspective, what does this mean for companies as they think about their go-to-market talent strategy?
Well, again, I always hesitate to just be too categorical because, again, if you're listening to this and you're a fresh startup and you're trying to just get the first, 50 customers, the talent you're looking at is different. Right? And of course you're going after growth. And, I don't recommend, trying to move the dials and, adjust for profitability on every single deal. I'm absolutely in favor of doing, my first few deals, I wouldn't want to judge the quality of the deals, but the quality of those customers and the ability for me to use them as lighthouse accounts that got me 10 more, that's what you want in the early days. But I guess I'm talking more to the companies like Exactly that are, a little more established, hundreds of millions of dollars of top line, or even 50 or $100 million of top line. That's when you really got to be more responsible about how you look at every single deal, and the types of talent that you want have to be folks that can grok that, right? Because those reps that are out there that believe and want to be the hero culture kind of person, they want to cut corners. They don't want to look at the quality of the deal, right? They just want to sell. And again, listen, I talk to CEOs all the time that love that, right? And there are times in my development where I've loved it. But I'm just, again, coming back to, if you're trying to build a long-term sustainable business, I think you got to find people, reps that can articulate why a multi-year deal with increases every year, is not heavily discounted. The things that we all take for granted because all we're focused on is the deal itself, not the quality of the deal.
Okay. You talk about the silver medalists, so the salespeople who don't necessarily get the best territory, but is there in your mind, is there a competency difference between the superstars and the silver medalists, or is it just the territories that they're given or the attention that they're given?
Yeah, I mean, I think the example we gave in the book about the silver medalist is more just around a study that was done that the difference between how the silver medal award winner feels versus the bronze, right? The bronze person is actually thrilled that they won a medal. The silver medal winner is pissed off because they realized that they were a tenth of a second away from getting the gold. And the difference between gold and silver is obviously pretty dramatic. And so we were talking, a little bit more about that. But, I forget the rest of your question there.
No. I was asking if there's a fundamental difference in competency between the silver medalists, because
I don't think so. I think this gets back to an area that Exactly has spent a lot of time with our customers on, which has to do with territories and how you create territories and how you build territories and the fairness that goes into it. And I think the very little secret in sales is that the way that most companies create territories and the way that most sales leaders go out, sales leads, to the extent that they're doing that in a more manual process, which a lot of companies are, is inherently unfair, right? Because you tend to give the Glengarry leads to your best horses, the ones that have closed and been successful and will continue, that you believe will have a higher probability of closing those deals. And so you almost create these silver medalists because you're not giving it to them. You're giving it to so-and-so that might not be better in any way. They may have just recently closed another deal, or maybe they've been at the company a little bit longer. And so you perpetuate this. And what happens is, if you look at the reason for a lot of sales turnover, there's lots of studies around, exit interviews around sales people that have left, a lot of the complaints they have is about fairness.
But,
oh, Johnny had a better territory than me. Oh, Susie got all the Glengarry leads, and my turn. Part of that is them whining. But partly there's some truth to it, right? Because of the way human nature is, where you kind of keep reinforcing your gold award winners, creating these runner-ups, which is not totally fair. Now, I don't want to plug exactly too much, but I mean, there's software out there that makes this process fair. And I think smart companies figure that out and use software that takes away a lot of the drama and perceived unfairness, so that now, it's one less excuse a rep has as to why they're not doing it.
all right. So this is good. So I'm gonna make a leap here, and a conclusion is you actually don't want to lose these silver medalists because they will be very valuable to your business going forward, but you have to make sure you've created the right operating conditions and fair operating conditions for everybody to be able to thrive.
That's absolutely right. And there is so much inherent bias in sales organizations because it is predominantly a manual process, how territories are created, who gets what territories, who gets what accounts. I mean, even, when you have businesses that have a lot of upsell opportunity within the install base, who gets which territories or zip codes or, that is 80% of who's going to be successful.
Right.
It has a lot to do with the pond you get to fish in, right? And so, which I think is bad. I think that in a perfect world, you should be able to create territories such that if you had 10 reps and you created 10 territories, you could literally put those 10 territories on a map on the wall and give each rep a dart and just say, hey, throw it at the board, because those are 10 equal territories. And whichever one it lands on, you shouldn't care. And it's even more true today, where the boundaries of zip codes and area codes and even time zones are gone. Like in the old days, that would be abhorrent because everyone's like, coming in the office, I'm not going to drive extra miles past this customer. This should be Susie's customer. Well, today, nobody's driving anywhere anyway. So, pretty much you can have territories that are unbounded by zip codes and area codes, but create fair territories. And that will alleviate so many problems and headaches. And then when you have your silver medalist and your gold medalist, you can truly say, hey, you both had the exact same level of opportunity. You had the exact same TAM, if you will, for the territory. That's what these software applications that manage territories can allow for. But you know how many companies do it that way? Very, very, very few.
Right. Because there's a level of trust where they say, I know this person and they've been with the team for a long time, and I'm just going to hand the best lead to them because of familiarity and a level of trust, as opposed to trusting we've recruited the right competencies and we've done the right development for the team. Now I'm going to give all of you identical race cars, and you're all going to finish within 1/10 of a second of one another.
Right. It's the Formula One program.
Yeah, well, now the fairness of Formula One, where they're putting caps on how much you can spend. It used to be, if you're a Mercedes, you're going to win.
You've been listening to SBI's GTM Value Creation Corner podcast with CEO Mike Hoffman hosting. Visit sbigrowth.com to read SBI's latest research, join upcoming events, or learn about SBI's GTM services. Don't forget to subscribe to this podcast and connect with us on LinkedIn.